The last specific ETF that we're going to cover here is VIG, the Vanguard Dividend Appreciation ETF. This fund tracks the performance of the S&P US Dividend Growers Index, and this index follows 338 US companies that have consistently grown their dividends for 10 consecutive years or more. This fund is good for those who are looking to derive income from their portfolio in the form of dividends, but are also still looking for modest growth potential. The overall expense ratio here comes in at 0.06%, and the 30-day yield is a 1.65% in terms of the dividend. Taking a look here at the style box, this is sitting here in the top middle, so it's going to be mostly large companies, but you're also getting a blend here of both value and growth, because this isn't necessarily the highest dividend payers. This is those who are consistently growing that dividend over a decade or longer. In terms of the total invested here, it's 100 billion. So again, this is a large ETF with quite a bit in assets under management. And the PE ratio comes in here at 25.3 and a 4.8 times price to book ratio. So it's going to be lower than that of like the growth funds, for example, but it is still trading at a higher multiple than international funds, for example, that we've looked at previously. In terms of the largest sectors represented, it's going to be information technology as the largest component at 23.3%, followed by financials at 20.1%. Then we have healthcare at 16.1%, and then industrials at 12.1%, consumer staples at 11.8%, and so forth. So you have a lot of money going into information technology, but not necessarily as much as we saw looking at some of those growth funds earlier. Taking a look here at the holding details, the largest component here is Apple at 4.57%. Then we have Broadcom, Microsoft, JP Morgan Chase, United Health, ExxonMobil, Visa, Procter & Gamble, Johnson & Johnson, MasterCard, etc. So some of the big tech names like Amazon, for example, are not listed here, and that's because those companies don't pay dividends. So you do still have a lot of concentration into some big tech names here, but it's specifically those who pay dividends and the ones that have grown that dividend every year for at least the last 10 years.